The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 15th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And you know the easiest way to do that? It's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. Not that they need checking in on, but we're going to do it anyways. We get to go see what the bulls, not the bears, are communicating to you and I, and the buyers and the sellers, which seem to have vacated the planet chart system out there. But we're going to go take a peek anyways. We're going to go look underneath the hood. I want you to know that I'm absolutely grateful for your presence here. But more importantly, and I mean this from the heart, the bottom and the middle and the top and the center of my heart, I'm here to serve you. So during this half hour, go ahead, go ahead and give me a call at 877-927-6640. We can take a look at any instrument that you want to, anything, try to figure out what might be going on, see if I can provide you with some support or resistance or anything along those lines out there. Of course, if you can't call in, we've got it all set up for you. You just have to send me an email. Let those fingers do the walking. Steve at TFNN.com. Inside the subject heading, if you'd be so kind to put radio show question. And of course, if you're in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow, everything is up to the green side. You got the Dow up 1.25%, the S&P up 0.75%, NASDAQ 100 only up 0.1% out there. That's up $7.75 or so. Russell up big, 1.5%, up $22. Semis are up just slightly, 0.25%, same as the transports out there. To the upside, leading the charge dollar-wise, it is Arista Networks out there, up $20. That's nearly 8.5%. Booking Holdings up $18. That would be a percentage of just about 1. AutoZone is up 15, up 1.6%. To the downside, Amazon leading the charge off $13, less than a percent out there, actually 0.8% to the downside. Netties, NTES is the ticker symbol, off over 5% or 13. Log me in, or lo mein, whichever way you're going to go ahead and repeat it. I could go for a little bit of shrimp lo mein out there, but in this case here, this is, I guess, a little shrimp lo mein. It's shrinking in size, down 13.5% or 13 buck-a-roonies out there. Let's go take a look at the indices. There are no questions, nothing on deck, nothing waiting to be looked at out there. So let's go take a look at the, well, we've got the Dow on my screen. So that's the default out here. Let's go take a look at the Dow. Kind of at a inflection point, so to speak, out here. Now, not an inflection point where really things are going to turn, but actually turn to the upside. You got, of course, you're going to say, turn to the upside. Are you kidding me? Haven't you seen the move off of the December 26th low? True. What I really meant is we're at this inflection point, typically where you could see some type of reversal or a slice through it to just let you know how strong the market has been. Well, it's been very strong out here. Now, what I'm referring to is if we go to the all-time high at the 26,951 level, that was produced on October 3rd, down to the low, and that was on December 26th, you're going to see that price has virtually reached or is very close to reaching the 0.786 retracement. I've got the 0.382 and the 0.618 retracement levels turned off on the screen here for the Dow, just simply to get rid of data that you and I don't need out here. Now, why that is important, and it's not a guarantee. I wish I could give you, the only guarantee I can give you is I'll give you my best. If you ask me something, I will give you my best. Right, wrong, or indifferent out there. That's the only guarantee. But typically, and I can't guarantee this, I think I just said that now twice, is that if, in fact, the Dow is able to move above the 0.786 retracement level with any kind of gusto, what it tells you is price is going to go ahead all the way back to its all-time highs, the 26,951 area out there. Now, granted, there are a couple of swing points where we have seen some reversals that are still in play out here. There's no doubt about that. So December 3rd would be an area that price needs to get above. That's at 25,980. Not really that far away from, in essence, where it's trading now. And then you've got one more swing point before it can totally make that move to 26,951. And that would be the level from November the 8th, and that is at 26,277. Now, what's really interesting about this data point where we're at in the Dow, and I do think that the next move in the market very likely comes from the Dow. Of course, it could come from anywhere, right? But I think the Dow. Now, here's a couple of things that you and I know. First of all, how did it make its bottom out here? Well, if we go to the swing point, the all-time swing point high on October 3rd, that would be our A point for our lightning bolt, our A to B equals CD. B point being October 29th. Nice retracement up into the date of November the 8th. And what price did was it made an ideal and perfect 1 to 1.618, A to B equals CD. I know somebody might out there say, Steve-O, why didn't it stop at the 1-to-1 level, which was 23,448? And that'd be a great question. And it is a great question. And somebody else out there might say, well, Steve-O, why didn't it stop at the 1.272 expansion? And when I say expansion, folks, if that's a new term for you, I'm referring to the expansion of the A to B leg, which was 26,951 to 24,122 out there. And we just simply multiply that difference by 127.2 or 161.8. And that's where we're at now. Well, the first, answer the question, why didn't it stop there? Well, we don't know why it didn't stop. We know that it didn't form a bottom there because there was no bullish reversal candle. Aha. You get to the 1.618 level, and that was a key reversal, bullish engulfing, bull sash candle. And taking a look at here, big old reversal candle. So you got the Gartley. You've got the Gartley buy pattern, forms on December 26. Every Gartley pattern has 5 potential different outcomes. 5 potential different outcomes. We're looking at outcome number 3 right now, which is the 0.786 retracement. Now, look, there still is the potential, we can never count it out, of a Gartley sell pattern that is in play. And if we take a look at the A to B equals CD pattern that's in play right now, we're above the 1.618, A to B equals CD. The 1 to 2 level, the 2.0 edition of the Trader's Edge show, that's at 26,040. Yeah. So there's still the possibility. But until we see some type of bearish reversal candle, a close below Stevie's red line or green line at this stage, take out some type of TAS market profile support level out here, the markets just simply want to continue higher. And that higher takes you back to 26,951. And guess what that does? That just takes us back to the top of the consolidation area. This is Steve Rhodes with TFNN. Would love to hear from you. Give us a call, send me an email, or ping me in the den. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 332. Hope everyone out there had a great Valentine's Day. Now, something that I said during the first segment out there, just thought it would make sense for me to just to recover with you, because what we looked at here inside of the Dow, I put together, by the way, the A to B equals CD. Let's do this here. Let me do this instead of using the E-signal system. Let me just switch over to the Dow Equity Futures contract, and because on that chart here, I've got everything in essence already labeled, and you can take a look at the bearish reversal signals, because as I pointed out to you, price is going to continue to move higher till we see some type of bearish reversal candle. But I also added a couple of caveats there, that alone, or if I didn't, I want to make sure that I clearly do that that alone, when it forms, is not the indication of that the market's getting ready to head south out here. Now, if we look at the A to B equals CD pattern, by the way, inside of the Dow Equity Futures contract, slightly different than the Dow itself. You'll notice here on my chart that we are at, or it is at, the 1.618 A to B equals CD level, which is 25,742. We're at 25,767 out here. So slightly different, slight difference between the futures contract and the cash. Does that make a big deal? No. But what I want you to notice here, let's see if we can maybe just expand this up. So here's the A to B equals CD pattern. Now, it's a beautiful price projection tool because the market does 75% of the work for us. What do I mean about that? Well, the A point forms on its own, even though you don't necessarily know where that is. But when it does form, as the right side of the chart begins to fill out, it gives you the A point, the B point, the C point. It gives you where it begins, where that first pattern completes. In other words, the price makes a high, pulls back, gives you retracement. And then all you and I have to do is become a master of the D point. That's along that C to D leg out here. Now, what I want you to notice is as price moves above, let me get my crosshair, as price moves above the B point out here, you'll see that price moves and targets the 1-to-1 area, 24,528. Price moves above that level on January 18th by a little bit out here. And it's not until the very next trading session, so no other bearish reversal signal along that way up. You get the first bearish reversal signal on January 22nd. Did that lead to a top? Well, you already know the answer, but it's always good to ask questions that you already know the answers to. Think about that when you ask somebody a question, especially if it's a child or a little kid. Make sure you know the answer because they're smart as beeswax out there. And not that beeswax is smart. Hey, stay on point here. Price never broke through support. Now, we can't see support here on this chart because, well, I guess I could. Hey, turn it on. Turn it on. That's what we say out here. So let's go turn it on. Turn what on? Let's go turn on the TAS market profiles. Don't you love I just have this conversation with myself? Got it. Well, I do. But did price ever break through support? The answer is no. Support here happened to be at the top of this profile. And all price did when it created that dark cloud cover was come back and test that level. Never broke through it. In fact, on the very next trading session, January 23rd, a brand new set of market profiles had formed out there. Price, of course, never closed below Stevie's red line. It was red at the time. The next time you get a signal that the market's trying to form a top, and folks, when you get that bearish reversal signal, it is the cavalry, it is the market, it is the bears communicating to you that they're doing everything they can. Think of it as a football game. The easiest way that I can find a metaphor. And you got offense and defense. And this here, the defense is really trying to take that ball back over. You know, it's like second down and 10 or 15, you know, and they run it up the middle. In the middle, basically, it's now third down and 15. Well, you get to third down and 15, or you get that other bearish reversal signal on January 28th. Little bear sash candle. Remember, we mentioned the bull sash candle in the case of the Dow when it formed its bottom out there. What happens on the very next trading session? Does price close below a level of support, a TAS market profile, Dow equity futures contract? No, it does not. Not even any follow through to the downside. You don't have follow through. You think about it, right? You got to have follow through out here. So then what happens? Well, price resumes its move higher, takes out the level of resistance established by those bearish reversal signals, moves higher up into the trading session, creates a little doji candle. Market is tired. February 6th, very next trading session, creates a bearish reversal signal. That was a three candle, a three river evening star pattern out there. What happens? Price on the very next day tests support. You were here. It was last Friday, if I'm not mistaken. It was some day last week. Maybe it was Thursday. Remember, and price was moving down there. It was during the show, maybe about 2 o'clock. And all I was saying to folks was the only thing that we can conclude at this stage is price is pulled back to support. Now, I got some nasty cards and letters saying, what do you mean? What do you mean? And it actually went on beyond what do you mean out there. And what I meant was what I said, which is that all we can say is that price is pulled back to support. Probably the most important thing you and I can do is identify support or resistance to try to figure out, is a retracement just a retracement? Or is a retracement something more than that? Is a counter trend rally something more than that? That's what you and I are evaluating, trying to decide right now. So price had pulled back on February 8th to nothing other than support. At that stage, it was two levels, the bottom of the daily profile and Stevie and your green line out there, something that you and many of you have adopted into your trading system. And that's a beautiful thing because what used to be invisible support or resistance is now extremely visible to you. So at this stage of the game, the next time that the bears could possibly raise their hand probably is not until, well, Tuesday, before they'd really communicate anything to you and I. At that stage, price would have to close at the end of the trading session, the end of the day, at least below support. And those two levels as we speak right now, the Dow equity futures contract is 25,283 and just slightly above that Stevie's green line. If the market pulls back, don't get your skirt in a tizzy. The only time it should get in a tizzy is if, in fact, price closes below support. Because then there is the possibility that the defense will have taken the ball and will try to run the ball back to their end zone or wherever it is that they're trying to head to. So until that occurs, price wants to head higher. And that's the name of the game out there. Hopefully it helps. I just wanted to make sure that I covered that for you with regard to not having you think the next time you see a bearish reversal candle at the end of the pattern that that's it. because it isn't it. You need to see levels of support fail. I need to see levels of support fail out there. And it works the same way, and here's the cool thing, probably the coolest thing of all. It works the exact same way no matter what time frame chart it is that you're trading, no matter what instrument it is that you're trading. Ruby's trading sugar. If we can go find a Gartley buy or sell pattern or something else, it works the same way. So when we come back, Ruby and I and you, because it was Valentine's Day yesterday, we're going to go see if we can figure out where support or resistance is in sugar and maybe where it's headed to. Of course, I'd like to look at what you'd like to look at as Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So if you're watching us on TigerTV, you're looking at 4 sets of charts out here, 4 different time frames for the March sugar contract, which has had one heck of a day today, I guess on a bit of a sugar high after Valentine's Day. So a big move out here. And I suppose the question, Ruby, is where is sugar headed to? Now, We're looking at a 30, a 30, a 120, a 300 minute chart out here. Maybe I take the 30 and we just change it to 60 for the heck of it. That's the left-hand side. But either way, what you're going to see across the board is you're going to notice that the bar, and we're looking at bar charts out here, each of them are green. So price is above resistance. It is above the top of the profile, the TAS profile for that time frame out here. So let's go take a look at the day, because the question should be, where is price headed to out here? Now, one of the things that you and I can see when we look at the chart for sugar out here, and let me just go ahead and get the tool out here. What we're going to do is we're going to draw a horizontal line, because we can see a clear level of resistance. In other words, where price has turned back each time out here. And that's right around 1321. We are trading at 1314. So to make it easy for you, Ruby, I don't know if you're long, if you're short. If you're long, what you know is you're up against an area where prices turn back, and so you would take some type of action. I don't know what that action might be. It might be exiting your trade. It might be adjusting your stop. It might be looking on a short-term time frame for some type of reversal signal, something along those lines. If you were looking to get in, you wouldn't do it here. Why wouldn't you do it here? Because you're really up against resistance. Yes, I said price was above all resistance. What I said was it was above all TAS market profile resistance. It means we've got to go open up the chart, see if we can find anything else that's out here. Now, if sugar can get above 1321, and more specifically, really the high of January 16th, the high of January 16th is the key level. If price can close above it, 1327, then what that says to you and I, just looking at this chart, is price should make its way all the way back to its highs, whether it's the low of the highs, the high of the high, the middle of the high, the trading session from October 24th. That's what I see when I take a look at sugar, Ruby. What do you see? Now, if I take over Stevie's other chart system, the Ninja Trader tool system, where we've got a bunch of proprietary tools that are built into it, or on it, I should say, interestingly enough, and this is where these tools, look, do they work all the time? No. But when they form, just like we looked at with regard to resistance levels, we pay attention. Pay even more attention. And if we take a look at the actual high that formed on October 24th, remember, that's where sugar could be headed to. When we take a look at the March contract, you can see that high formed with a 9 count. The power of 9 out there. Amazing how that works. I don't see any other pattern that exists right now on the chart. So if sugar clears the highs that we looked at, this says that price would get back, not all the way to the swing point high, but watch the trading candle from October 29th. That green dash line out there, that Tom DeMark setup trend line. That's what you would be looking at just above 14. So I hope that helps you out with what sugar is doing. You also wanted to take a look at cocoa futures. Cocoa for Cocoa Puffs out here. Now, which contract is trading for that? I don't know. Is maybe it doesn't look like it's March, because the volume is, maybe it is, but the volume looks kind of low out there. Let me do this here, and maybe it is. I don't know. I don't trade cocoa, but certainly you need to know which the active contract out here. But let's go take a look at, I was just looking at my other charting system, see if I have the continuous contract out here. Well, I've got March too. I'm going to go ahead and put up March until somebody tells me not to. And I'm just looking for any patterns. Now, look, here's what we can see in taking a look at this contract. You'll see that each of the bars are green. And today, this is having a nice move. And when I say nice move, price taking out the resistance level of the top of that daily profile out there. So therefore, where is price headed to out here? You know, this is either making a retracement, and so you can watch those retracement levels. That would be from the high of December 31st down to the low that was put in on the trading day of January 31st. So the next level out here, 23.32, your 0.618. That could be a place where price would pause. People would get off of the elevator on the way up. Doesn't mean that's where it will turn. It could turn, but doesn't mean that it will. How will we know if it does turn? Well, we would know that because you'd see some type of bearish reversal signal. If it can get through that level, the next level is the 0.786 retracement, 23.79. Oddly enough, or interestingly enough, price would be getting up to the swing point that we would be targeting So the bottom of that swing point. So 23.79 more likely than not is the price target for cocoa. And in that case, you would just want to go ahead and take a look at volumes of prices moving in to that swing point with volume. Then it says the high gets tested out there. And that's all that Stevie sees when he takes a look at cocoa for Cocoa Puffs. And hopefully that was the correct contract. Let me see if there's any questions that have come in. I think I've gotten everything in the den. There are two questions. There's three questions out here. The first one, and so thanks for writing in these, folks. There's four questions. That's a beautiful thing. First question, I think you can answer this one pretty quickly. This is from JS. JS is writing and saying, Steve, it looks like this is going to be the 8th week in a row with a higher high in the NASDAQ 100. Does that mean anything? And I don't know how did you ask that question? That's my question. How did you ask that question? So the reason why I say that is because I had began tracking that a couple of days ago when I made some changes to one of the tools that we use out here. And here is what JS is referring to. If we take a look at this, remember, this is different. This is different than that power of 9 count out here. This is just looking at successive closes, whether it's up or down, successive closes in a row out here. And this week doesn't have number 8 on it because the week is not over. But you can see and it looks like we will close, I would say pretty darn tootin' good chance we're going to close above last week's close. This will be week number 8. And actually I had asked the same question out there of myself, which is why I made this adjustment to the tool. And what I'm going to show you is, is there something magical to number 8 on a weekly basis for the NASDAQ 100? And the answer is no. Actually, the largest number of consecutive weekly closes inside of the weekly chart for the NDX 100 is 14. And we had that occur back in April of 2012. It actually began the week of January of 2012. There were 14 weeks in a row. We had that happen one time before that as well. And by the way, if the question was like that some type of ultimate high, like a sugar high, the answer is no. We did have that happen one other time. So before we go to break, let me show you when that occurred on the weekly time frame chart out here. 14. 14 is really the magic number. It's not a magic number like it's some type of major top out there. But 14 weeks in a row, the week of January 15th, 1999. Maybe it's a momentum thing. It was just telling us, yeah, you'll do a retracement, but then you've got much further to run. That was the message in 1999. Steve Rhodes with TFNN. We get back. We'll go look at Earl's question, Tim's question, Dan's question, and any other question that comes in as long as time permits. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You know, I do believe everything in life does happen for us, and this is no different. I mean, you take a look at today. We've already taken a look at sugar, and then cocoa, and it's only fitting that we have a caller in Denver who wants to take a look at Rocky Mountain Chocolate Factory, who probably uses both out there. So, Ron, thanks for calling, thanks for holding, and thanks for the consistency of the Friday Sugar High show out there. How are you today? Do we have Ron? Guys, in the day, Ron, do we have you? Oh, that's a bummer. That's a bummer. If Ron is talking, I can tell you guys, I can't hear him in my ear. So overdosed on sugar, yeah. Well, Ron, look, thanks for calling in. And let me look at Rocky Mountain Sugar for you. I don't know what you're doing, in it, out of it. Here's what we know. Yesterday, with Rocky Mountain, and I probably have had Rocky Mountain chocolate. They have been out in Colorado enough that these gotta have had Rocky Mountain chocolate out there. Yesterday formed a shooting star candle. Not really a great thing when price gets up to resistance to see that bearish reversal. So you could see the shooting star right there. So here's what you know if you're in it, you're not in it. 893 is a key level of resistance. It was the top of the market profile. The actual high yesterday was $9, even Steven. Basil loves those round number highs out there and lows. So I don't think he would really care much for Rocky Mountain Chocolate Factory or Charlie in the Chocolate Factory from a round number high standpoint. So I don't like it. It needs to clear that level above $9 for the so-called very shallow bullish move to continue inside of this equity. What also happened this week is on a weekly basis, price tested the top of that profile too. 897 is the number out here. So this thing has been in a consolidation for, in essence, since October of 2018. I think there's better places to get your sugar high on than Rocky Mountain Chocolate Factory. Now let's go back to the other questions that had come in out here. Somebody was asking about Box. Oh, here we go. Earl the Pearl wanted to take a look at Box. And the question was, in essence, will Box target the 30 area? And I believe Earl is long BOX. Here's the issue you've got over the coming week. What Price did not do this week is take out its weekly bear structured profile. That's at 24.55. The high so far, $24.49. That's a level. If you want to know, will price get to $30? Price must take out that area. Nothing more bullish than a failed bearish pattern. You didn't exactly have that test this week, or maybe you did. We don't know because you're so close, but no cigar. So be careful with regard to box. That's what the weekly time frame says. The daily says, hey, we took out resistance this week. We did it 4 days ago. We pulled back and tested it yesterday and rejected it, 23.83. So that looks good, but price has got to take out 24.55. And I would give you this one other thing to think about. Always something to think about. When box makes its bottoms and box makes its highs, like many other things, like many other instruments for whatever time frame, it does it on prices, in this case here, highs, moving higher, less relative energy. Be careful inside a box, because that's the pattern that's in play right now. And I don't make this stuff up. You thought I was going to say sugar up. No. But if you take a look at the last high that formed in box out here back on June 21st, and this was up in the $30 area out there, that's where you're targeting. That's where you've got the most recent high, the Rhodes momentum indicator top out there. You don't have that topping pattern just yet, but if you see a bearish reversal signal, you get back below the daily profile of 23.83, and then it's going to make 21.73 before it makes 30 bucks, and that is what the charts are saying. All the charts are saying with regard to box is just be careful. Keep an eye out on it. Tim writes in and says SCHN seems to have broken out a bit. Am I too late to enter? And that is a Schnitzer. Schnitzer, no idea what Schnitzer does. Broke out. SCHN. Seems to have broken out a bit. We're going to go with the bit piece of broken out, if you don't mind. But maybe I need to pull the chart back further. See, I look at the monthly chart out here, and I don't see a breakout. That's kind of where, Tim, that's where I was kind of coming from this. If I see anything on a monthly basis, it's broken down. It's broken down because it's trading below that monthly profile of 25.76, and this just says to us, so far you've just seen a little bit of a counter trend rally out there. That's what the monthly time frame shows us. What does the weekly time frame show us? The weekly time frame says the same exact darn tootin' thing out here, because prices tried to get inside its profile, inside its box, which would be the bottom at 24.12, and it continues to get rejected out there. Real key level for price to close above, and then maybe this thing will go ahead and move to 26.51 and 28.90 out there. Now, I can see and take a look at the daily chart. You're saying, well, maybe it broke out because it's higher than it was on January 2nd out there. No doubt about it. But has this thing really broken out? Look, it made the bottom the way that it should have, right? Again, I don't make this stuff up. You call in or you write in or something. We just put up the charts. And how do charts make tops and bottoms? Well, there's several patterns out there, but of course one of those is that Rhodes momentum indicator bottom. That is exactly how SCHN Schnitzer made its bottom out here. When prices moving lower, doing less relative energy, gave us that little bull separating line back on January the 5th, but we haven't really seen a lot of movement here. Unless there's something, Tim, some reason why you want to just go ahead and park your cash in Schnitzer out here, you may have a long road to hoe, because there's some what looks like fairly major resistance for whatever reason on the weekly and the monthly time frame chart. So the answer is no, you're not too early or too late when it comes to Schnitzer. We got Dan Y. He writes in, wants to take a look at ticker symbol CZR. So let's go take a look at CZR and versus CCR. And at Friday at 1:49 in the afternoon, I would much rather be playing and listening to some CCR out there, but we're not. Now, this is Caesars Entertainment. Hey, great company, right? The Caesars Palace, Roman Empire. They own the Roman Empire in Las Vegas. Entered this as a longer-term trade 2 months ago, around 871. This is at 932 right now. Target's 11 bucks. Can you give me your thoughts, given a fairly ugly candle today? I wouldn't be worried about today's candle per se just yet. Slightly ugly. in that it is a dark cloud cover candle, but just really slightly ugly, because what it hasn't done today, Dan, is it's just really come back and tested the top of that daily profile at 932. Caesars Entertainment should have support at 903. I'd be more concerned about 903 than the mere fact that this traded up to a high of 965, has pulled back and is trading at 932 right now. 903 really becomes your level, I think, inside of Caesars Entertainment, CZR, that you should be concerned about. But you're in it for, you said, a longer term trade. So don't let the daily candles knock you off your game plan out there. Prices above 862. 862 is the top of that weekly profile. It looks pretty good to me. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So probably the last instrument for us to take a look at, JR asking thoughts on light sweet crude. So if we take a look at the April contract out here, for the most part, now there's a new profile that appears to be forming in the 60-minute time frame. We know that because the bar is orange, but the prior bar was green. Prices above the top of that profile, that's bullish. The 2-hour time frame, green above the top of the profile, 5-hour, green above the top. And the daily time frame is testing resistance right now. So, 154 in the afternoon, I would assume you're not going to try to enter a new trade out here. But what you would want to watch, at least today, and going into Sunday night, if you're trading light sweet crude, you're going to want to watch 55.61. You're trading at 55.76 right now. That is the top of its box out there, and a close above that says that light sweet crude should want to move higher. Now, move higher to where? I would say this. I would watch the top of that profile, right? We gave you that number, 55.61. I'd also watch the high from the trading day of February 4th out there. And that high is 56.05. So let's call the real number to the upside 56.05. That was the last time that the bears showed up. I know it doesn't look like it here because we're just looking at bars, but that was a bearish dark cloud cover. It was the high so far. That's really resistance. So resistance between 56.05 and the top of that box out there. If price clears 56.05, where price should head to, well, there would be or could be an A to B equals CD pattern that could unfold. That A to B equals CD pattern would give you a price projection to the upside of 64.67. That would be the one-to-one out there. I would say if, in fact, light sweet crude comes Sunday night, Monday, Tuesday, okay, when we'll be back up and running full time out here. If price is above those levels, watch 64.67 to 68.22 as your price target. Right now, light sweet crude just dealing with PS day at resistance. Folks, thanks so much for being here this week. Always great to be with you. We'll see you again on Tuesday because Monday is a holiday. Yee-haw! Stay tuned. Your favorite polar bear, David White's up next. Tom O'Brien, 3 to 5. And have a great holiday weekend. Be safe.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.